So let's break it down. What is EPS in plain English?
Well, at its most basic level, EPS tells you how much profit a company is making for each share of its stock. It's a way to measure a company's profitability on a per-share basis.
Makes sense. So it's like if you take all the company's profits and divide it equally among all the shares out there.
Exactly. It gives you a snapshot of how much each piece of the company is actually earning.
All right, that's the what, but how about the how? How do we actually calculate this all-important EPS figure?
The formula is actually simpler than you might think. It's all about three key components: net income, preferred dividends, and average outstanding common shares.
Okay, let's unpack that. Net income? I get it's the company's total profit after all the expenses and taxes are paid.
Right. It's that bottom line number everyone focuses on. Then we have preferred dividends.
Preferred dividends.
Yeah, these are payments made to holders of preferred stock, which is kind of a special type of stock that gets priority when it comes to dividends. But not all companies have preferred stock.
Gotcha. So if a company doesn't issue preferred stock, we can skip that part.
Exactly. Makes the calculation even easier. Finally, we have the average outstanding common shares.
So that's the average number of shares that are actually held by investors over a certain period.
Precisely. We use an average because the number of shares can fluctuate a bit throughout the year.
All right, I think I'm following so far. To get EPS, we take the net income, subtract any preferred dividends, and then divide by that average number of shares.
You got it. That's the EPS formula in a nutshell.
Perfect. To really solidify this, let's use a real-world example. What do you say we take a look at Apple's 2023 fiscal year?
Apple's a great example. Let's see. For 2023, their net income was a whopping $99.8 billion.
Wow, almost $100 billion.
Impressive, right? And as we mentioned, Apple doesn't have preferred stock, so no preferred dividends to account for.
All right, so that simplifies things.
And their average outstanding common shares for the year were about 15.75 billion.
Okay, so let me grab my calculator. We're dividing $99.8 billion by 15.75 billion shares. That gives us an EPS of...
Drum roll, please. $6.34 per share.
So for every share of Apple stock someone held in 2023, they essentially earned $6.34 of the company's profit.
Exactly. That's the power of EPS. It boils down a company's performance to a per-share figure, making it easier to understand and compare.
Speaking of comparing, why does EPS matter so much to investors? Why do they obsess over this number?
It's not just about the number itself, it's about what it tells us. EPS is crucial for a few reasons. First, it allows investors to compare the profitability of different companies, even if they're in completely different industries.
So it levels the playing field in a way.
Exactly. It lets you see, on an apples-to-apples basis, which companies are more effective at generating profits for their shareholders.
Of course, a higher EPS generally sounds better, right?
Sure, on the surface, a higher EPS might seem more attractive, but it's important to consider the context. You have to look at industry trends, company's growth rate, and other financial metrics to get the full picture.
Makes sense. It's not just about chasing the highest EPS without understanding the bigger picture.
Absolutely. Now, another key reason investors care about EPS is because it directly impacts a company's stock price.
Oh, how so?
Well, EPS is a key factor in determining the price-to-earnings ratio, or PE ratio. This ratio helps investors evaluate whether a company's stock is overvalued or undervalued based on its earnings.
So EPS is like a building block for other important valuation metrics.
Exactly. And finally, EPS is a great indicator of a company's overall financial health. Well, a company that consistently grows its EPS over time, like Apple, is generally seen as a well-managed company that's effectively using its resources to generate profits for its shareholders.
It shows they're on the right track.
Right. It suggests they're in a strong position to keep growing and creating value for investors.
I feel like we've really unpacked EPS today. From the formula to its real-world implications, we've covered it all.
It's a deceptively simple concept with a lot of weight in the financial world.
Exactly.